are right at 6 o'clock. So I'm going to go ahead and kick it off. And thank you to our guests who have joined. I know a few of you have your screen off. Feel free to turn your screen on if at any point you'd like to. And we're also going to open it up for questions at the end. So if you have any questions during and don't want to forget them, feel free to put them in the chat. You can use that function. And then we'll also have that time at the end of the event for questions as well. So thank you all. My name is Lindsay and I'm from the Women's Creative. And this series is really focused on creating resources and opportunities for our creative women. And this month we're focusing on finances. And so I'm very pleased to introduce our moderator for this evening, Erin Joy. Thank you all for being here. And Erin, I'm going to pass it right to you.
Well, Lindsay, thank you so much. And thanks for the invitation to put this panel together. These are my favorite money people for different reasons. And so we're going to hear from each of them and learn from them. And we definitely have time for your questions at the end. I, again, am Erin Joy, and I'm the founder and CEO at Black Dress Circle. We are a business coaching and consulting company focused on women entrepreneurs. And we have a great relationships with the Women's Creative. And we're an immediate yes to anything we can do to support this awesome organization. What I want to do is have each of our panelists first introduce yourselves, and then we'll kick things off with our first question around lines of credit. So we're going to I'm going to ask you several questions, and we'll kind of work in a variety of orders, but let's just dive right in with Hyacinth Henderson, who is hailing from Miami, Florida. So Hyacinth, would you just come on in and introduce yourself to our guests?
Yes, absolutely. Thank you so much for having me here, a part of this panel. I'm excited to be here. I am in sunny South Florida. So let's see, who am I? I'm the money lady. By day, I do financial planning. I've been in the industry 18 years. So I am a licensed stockbroker, an investment and annuity broker as well, an investment advisor as well. I'm very passionate about the mindset and money connection. So doing this for 18 years, I realized that most people don't have a money problem. Some do, but the money problems start in the mind. And so it's a mindset problem. And I run a full service financial planning firm based out of South Florida. My father started it 30 years ago, and I've been with the firm for 18 years. So that's me in a nutshell.
Amazing. You can see why I immediately thought of you with a panel about money. So thank you, Hyacinth. How about Dan Iadivito? Dan is right here in St. Louis with Enterprise Bank and Trust. Dan, tell us a little bit about yourself.
Great. Thank you. Thank you, Lindsay and the Women's Creative for having us, and Erin for moderating the panel and for the invitation. My name is Dan Iadivito. I'm with Enterprise Bank and Trust, and I'm the Vice President of Business Banking. So I build relationships with small business clients to help them with cash, capital, and cash flow planning to prepare for opportunities. So I'm excited to be here, and thank you again for the invitation.
Well, thank you for being my banker, helping me with cash flow, and capital. So appreciate it. Let's come to Elizabeth Farmer.
Thank you for inviting me to be a part of the panel. I am Elizabeth Farmer. I'm a CPA in St. Louis, Missouri, and we specialize in serving our small business clients primarily with accounting and tax preparation advising. We also do plenty of individual income tax returns, so this is a crazy time of year for us. And I just want to say hats off to all of the people who are either tuning in or who are here live, because it's really hard to face finances. And February is a tough time because a lot of times people are facing the results of decisions that they've made at the end of the prior year and trying to figure out how to make things work and put together. And coming in and facing it head on is definitely the way to start.
Well said, Elizabeth. And I am going to bring Rob Bertman in next, who happens to be my money coach and someone who I am facing my 2020 decisions with very harshly, in very harsh light, like this wing light on my face right now. So Rob, come on and introduce yourself.
Thanks, Erin. Thanks for having me. And Lindsay, thanks for having me as well. And nice to see all of you and meet all of you. My name is Rob. I have a company called Family Budget Expert. So I'm a prior financial planner, financial advisor, used to run investment portfolios, but found out that really where people struggle the most in the day-to-day is, not necessarily how much to put towards retirement or how much to put into their business or how much to put towards kids' savings or buying a house. The biggest struggle they face is coming up with the money to do that at the end of the month. So I specifically help couples and families and individuals come up with that free money at the end of the month and then deploy it that's going to best suit their lives within their values and priorities, and also, really maximize their balance sheet and help their wealth grow over time.
I love it. I'm loving our work together, as you know. I sent Rob an email last night, like almost in the middle of the night. These are all the self-awarenesses I'm having about money. To your point, Hyacinth, as we're engaging in this work together. So let's begin with our first question around lines of credit. So I'd love to talk a little bit about resources for lines of credit. I'd love to talk a little bit about why would a business owner tap, or first, establish a line and then tap a line of credit. So I may not be asking you all the questions that you would want to get into about lines of credits. That's for our panelists, but wherever you want to go here with this topic around lines of credit, I want to open that up to you. I think it makes sense to start with you, Dan, an actual banker, about resources for lines of credit for small business owners.
Yeah, great question. Thank you, Erin. I would say, starting off with lines of credit, have it before you need it. Have that relationship in place, have that line of credit in place before you have a need for it. Because sometimes if you wait until you have the need, it might be too late. So definitely start having those conversations early. Lines of credit work great for businesses that have cash flow challenges. If you have a seasonal business and things of that nature, they can really help out to get through those slower periods. Or if you have a business where some of your clients are on a net, 60 or 90, or worse, 180. If you have some of those clients that are really long pays, cash flow lines of credit can help with that as well. As far as resources for it, I would typically suggest starting with your banker and looking at traditional financing for those options. There are other options. So if for some reason traditional lending doesn't work out, you can look toward your economic development arms of your municipality, such as in St. Louis, the St. Louis Economic Development Partnership. They have different financing options through the SBA. And then there's also some CDFIs, community development financial institutions, that can be really helpful as well, that have cash that's separate from traditional banks and separate from SBA lending. That can sometimes help, especially if you're looking for a smaller loan. So lots of different options out there. And I think the biggest piece is just having the conversation and looking to, establish what those resources are. And again, doing it early so that way, you know what's going to be needed when you have that request.
Agree 100%. I mean, I grew up hearing that whole point about get that line of credit or get that loan before you need it. And I've, passed it along to my clients, and sometimes they take action, sometimes they don't, but I never say I told you so. As tempting as it is, if they don't go get that line of credit and then they have a need and it is too late, it is really painful to see. Let's hear from Hyacinth Henderson on the topic of lines of credit. Hyacinth, what do you think of when you think about resources? What do you think about when you think about lines of credit that business owners should be thinking?
So I love what Dan said, everything that he said about having it before you need it, you piggyback on, or veggie backed, as I like to say, on that as well. So cash flow, and I think Dan said this word too, and I'm very big on cash flow. So sometimes we get excited on, oh my gosh, there's money. Do I need money? And it's like, wait, before we determine if you need money and how much money you need, let's look at your numbers. Let's look at where you are. How is your cash flow? Because if you're in tune with your numbers, you'll have a better idea of what you can and cannot do with the line of credit, and if it's a good fit for you. So we want to avoid obtaining the line of credit and then spending it out again, right? And so now we're back at a cash flow issue. So I love to advise business owners to look at your cash flow, look at your numbers, face them in the mirror. They are yours. They aren't going anywhere. Get to know them really, really well. And also pay attention to interest charges. How much is it going to cost you? So we can get excited about getting money, but how much does it cost you? What's your interest rate? What happens when you tap into that? And so that's something else that we can make, we need to be aware of so that we can make wiser decisions. Because if I know that this is going to cost me, $5 to borrow, right? $5 a month. Well, I surely need to be putting this to use that's somewhere in a place that's going to earn me more than $5, right? So let's not even use the word interest and things like that, but just break it down in that way and get in touch with the numbers that way. So I think as a business owner, if we understand that, number one, money is everywhere. Okay. Money is everywhere. It's sunny in South Florida. It's snowing in Texas. You just have to change your view. So when you take that stance of money is everywhere, we can stop being so excited about someone giving us money and then make an informed decision. What am I going to do with this money? And how much is it going to cost me? And if what I'm going to do with this money is going to earn more money, because guess what? We don't want to pay back the cost of the money. We want the money working for us so that we can say, thank you for allowing us to borrow it. This client, this employee, whatever it was, this resource that I expanded my business paid for the cost of doing business. So just thinking about it in that way.
Excellent. Well said. Let's hear how, Rob, how you think about lines of credit for small business owners, resources, how you would know to go get one, other tips for accessing that capital.
Yeah. Well, I think anytime, a line of credit is just like any other kind of debt where we hope to avoid it if at all possible, right? I always say that debt is really what it is. It's money you've spent, but you haven't paid for yet. So I agree with Hyacinth 100%. If you're going to be taking this money, you have to get a return on that investment. I will say, though, in my experience, a lot of people have credit card debt because their business has cash flow issues, and a line of credit is much more favorable than having credit card debt. So it is important, like Dan said, to have it set up, but it's also important to treat it sort of as you don't want to like keep it on the books if you don't have to. Sometimes with debt, we get comfortable just kind of seeing a little bit of it there. Then all of a sudden we're like, oh, it builds up a little bit more. So you just have to have that plan of attack to pay it back once you're in a position to do so.
Very well said. Thank you. Elizabeth, as an accountant, how do you think about a line of credit, either, with your clients or perhaps even in your own business?
Well, I think that wise business people use debt wisely. And what all the panelists have said is completely true. You want a business plan where you are going to borrow and make more money than you are borrowing on the money that you've made. And then you need to track it. And what I encourage clients to do is think of it like if that was their very own money. That line of credit is theirs. That's what's being deposited so that they can know, because fact is they're going to pay it back if the business doesn't. Everybody's personally on the line for those lines of credit in their businesses. You just can't escape it. What Dan didn't say that I think precedes the whole idea of getting a line of credit before you need it is you need a banker. You need a banking relationship in order to be able to plan what you're intending to do with your business and as you grow. And also because I'm on the back end of things, and I'm sure that both Hyacinth and Rob have seen this, we see the loan sharky type things, not even the credit cards, but like the advances from Square or QuickBooks or any of those things that are able to see what your income is and will loan against those receivables. It becomes basically a disciplined way that you're going to end up paying back, but it's very costly in terms of interest. And if you can create that relationship to get that line of credit from a banker, you're going to be ahead of things. And yes, I agree, it needs to be in advance. So I don't have really anything new to add other than just caution. Be wise.
Love it. That was perfect. Thank you, Elizabeth. I want to come to Rob with a question. And first, Rob, and then we'll come to Dan next. Rob, when is it okay to take on debt? So how does a business owner know that it's a calculated risk to take on some debt?
It's a good question. It sort of depends. Some businesses are more capital intensive, meaning you need to actually like buy stuff, a place to rent, some equipment, stuff like that. Those capital intensive businesses, you kind of need to buy the stuff before you can operate your business. And in that case, it often does make sense, right, to take out some debt to do that because you're going to get a return on that by operating your business. But I think for more like coaching consulting businesses with very low overhead, I think lines of credit should be proceeded with caution, and really any debt in general. The purpose of a business is to do what you love, right? If you're starting your own business, like you want to do something that you really, really enjoy, that you're good at. But we also need to set financial targets behind that, like targeting a certain profit margin of the business so that you can actually take money home. And the business is going to go slower than you think it will, I think that's happened. I mean, definitely happened to me. I think I'm like 2 years behind where I thought I would be. But so in some cases, debt is okay, but you have to like know when to say when is enough. So I guess summarizing, a capital intensive business, debt is probably more likely to give a bigger benefit. But for something where you don't have to do a lot of investment, you just need like software and yourself, then lines of credit aren't necessarily going to be all that important.
This is why I hired Rob. I have a high risk tolerance and a high debt tolerance. And so, Rob, you're helping me think differently about my business and about money in my business. Dan, thank you. Dan, what do you think when you think about when it's okay to pursue debt?
Yeah, I think Hyacinth had a great point. And as far as what are you getting from that debt? What are you getting out of it? What are you getting in return for paying that interest, which is a really great point to consider. I think a big piece of it is ensuring that you have the ability to repay and being honest about that. Because I think, I've had conversations with business owners where they look at it and are like, well, there's enough money coming in to make that payment. But when you really look at it, it takes away all of the extra cash to do that. So making sure that there's really enough cash flow and revenue to support that request. And then I think another piece of it is, ensuring that, you're not using it to cover things like payroll expenses or other loans. Sometimes that's a request if I need a loan to be able to make this other loan payment. Or past due taxes. Those are things that, the business is typically not in a great spot if they're trying to take out a loan to cover those major things. So, understanding really what the request is, and again, just going back to having that conversation as early as needed. So if you think there's a capital purchase in 2 years, or, there's going to be some expansion in a couple of years, have that conversation, to Elizabeth's point, early with your banker. So that way, in advance what's going to be looked at, what's going to be expected. So if the business isn't in that position today, you have some time to get in that position and be prepared for it.
Absolutely. That is a hot tip right there, is to start much earlier than you think you might have that need, so that relationship's in place, that you can start taking action to prepare to become even more bankable. Elizabeth, how about for you? How would, again, maybe even in your own business, you're massively growing at Farmer and Associates CPAs. Elizabeth, what would you say about how to know it's okay to take on debt?
Well, while Dan cautioned against using that debt for payroll, in our case, that's exactly what we want to use it for, because that's what generates profit for our business. So what we need to know is, do we have the business that's going to pay us for the work that the people are going to do? So we have to make sure that our clients that we're bringing in are good clients that are going to be able to pay, and that it's just basically a timeline. We have to pay them before we're going to get paid. And we've also adjust our payment terms with our clients so that we have a little less of that. And we smooth things out in terms of their payments for them. So that is certainly one way that I would look at from a service-oriented business. But again, all the time looking and knowing that this basically is money that I'm going to have to pay back if we cannot make it work from a business standpoint. That kind of personal accountability, holding yourself to that kind of standard, is going to make you reluctant to waste that money. And even to use it to pay your own expenses, which, oh my goodness, like so many people have gone there. So many people have been there. I've been there. I've had clients that have been there. You're just trying to scrape by a living and you don't know what to do. The issue is that I've heard it said, sometimes the hardest thing to do is make a sacrifice today in order to have something in your future that you're not going to have if you don't figure out how to make it work today. And we do have the power to make strong decisions around our money. We can do it. And we can do it with emotional joy and strength and determination, and not out of a sense of just, dang, if you know what I mean.
Yeah. And that's why your business is growing so beautifully. So well done. How about Hyacinth? From your perspective, how does a business owner know that it's okay to take on debt?
So I love the input that everyone shared so far today on this topic, especially debt. Because first of all the business owners here, I'm going to take an educated guess and say you're here, but you're not necessarily, except the panelists, of course, you're not in the money business, right? So your business is around your passion or your purpose or something else. So all this sounds like, it can sound like womp, 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 Charlie Brown to you. I want you to think about debt like potatoes, right? So I have a love-hate relationship with food where I mostly love it, especially potatoes. And so when I love it too much, a little voice in my head starts telling me that potatoes are bad. And then I'm like, well, no, potatoes aren't bad. You eat too many potatoes and you like them fried instead of baked, and the white ones instead of the sweet ones and things like that. Think about that debt in that way, right? So debt isn't necessarily bad. It depends on how you view it and how you use it to your advantage. And I think something that's very important for you to make that decision on when it's time for you to take on debt is you got to look at your cash flow. I'm big at cash flow, and breaking down your sources of cash flow, right? So one source of cash flow is going to be from operations, whether that's products or services, right? Your business, whatever your business is. So you know the money that you have coming in there. Let's spend some time looking at that. Another source of cash flow may be from investments, right? So maybe you put that money to work for you. What interest payments are you getting? Are you getting any dividends? What's coming in from your investments? And the third may be, well, maybe if you buy or sell something and you get a big lump sum of cash flow. So when you look at your cash flow, then what I want you to do is to say, I need to forecast. It's another fancy financial word that I know you all are in business because you're good at what you do and you love it so much, and someone told you should start a business. Financial forecasting is important. Before we can decide if you want too many potatoes, too little potatoes, you have to know what your cash flow is and then look in the future a little bit. You have the ability to do that. Your cash flow is going to help you in your financial forecasting. And so after you've done that, then you get to decide if you want dessert. It's like, I ate all these potatoes, now I'm ready for some dessert, AKA debt. So it decides what you can put on your plate, right? So I like to use words to give you that visual. Do I have room for debt right now? Or do I need to eat some of this other stuff first? Or I need a little bit more zucchini now, and maybe I'll have dessert next go round. So you have to think about it really in that way. And I know that money and numbers and debt can be so scary. But I promise you, when you spend some time with it, you're like, wait a minute, I've got this. I am in control. I get to decide if I want debt, how I'm going to use it. I'm not going to allow anyone to tell me that it's bad, because all potatoes aren't bad. That's my take on it.
Excellent. Very creative response. I love your creativity. And I want to shift the topic now to how to know how much capital your business might need. So we can think about that through the lens of a brand new business that's starting up, a business that wants to expand. Is determining how much capital you need, well, depends how much my banker will give me. Is that the answer? Elizabeth, what would you say about how do you determine how much capital you need?
Well, we're going to talk about forecasting again. So what you're basically going to need to look at is what your expenses are going to be over a period of time, the ones that you literally cannot get out of or work out any kind of payment plan with. And then how are you going to get paid for the work that you're doing? How much are you going to get paid? And how are those two things comparing? And how is it all working out from a cash flow standpoint, this is one of those words that we're using. So in the terms of your business, let's say you're selling things, because it's a little bit easier to think about the world in the terms of selling things than selling your time. If you know that you've got to pay $1,000 in rent for a place that you're going to be, your phone bill's $100, you've got insurance that you have to pay that's $50 a month, we're at $1,150 a month. You're actually making $2,000 a month is the least that you can bring home. Well, we're starting to get an idea of how much revenue we need to have every month. And if someone's coming to me and saying, I'm going to start a business, I'm going to hope that they have a source of money for at least 45 days and preferably 90 to 120. That's the advice that I give my clients. Now, our other panelists might have better advice than me, but that's where I start with and say, look, I don't really want you to have to tap into your retirement in order to make this happen. Home equity is going to be the best place for us to start if you don't have cash savings. There's got to be a nest egg that is the start of what you're going to do. Otherwise, I have seen people who had their business that was kind of going to, it's going, they already know who they're going to start with and they have a good idea of their cash flow, and they can just like be so tight with that money that they then build their own little nest egg while they're putting it together. I hope I'm not talking too long.
No, that's great. That's great. That's excellent. Thank you, Elizabeth. How about Rob? Rob, how would you answer the question? How would a business owner, maybe a brand new business owner, or a business owner who wants to expand, how would a business owner know how much capital they need?
Yeah, I would say, it's forecasting is huge, but you also want enough that's going to light a fire under you to stay motivated, that you might run out, and that fear will help drive motivation. But, when I would look for life insurance, for term life insurance, whenever I give advice to my clients about it, I always say, like when I die, for example, I want my wife to have enough money where she doesn't have to marry a sugar daddy, but she also can't go marry a cabana boy either, So you need to have enough capital that's going to help you last. Now, this is really important because, not only to forecast your business expenses, but you have to forecast your personal expenses too. Because ultimately, if you're running a business, you also need to make a living off of that business so you can support your lifestyle. So the capital, I would tend to go more on like the 6-month timeframe of what you expect it to be, because inevitably revenue is going to come in slower than you think. I put some notes in here, but yeah. So basically, I'd say start with it about 6 months, because I think that'll give you some time to make sure that it's working. But you do have to account for, you got to track your personal expenses, know how much you're spending on a monthly basis. And then you need to forecast your business expenses too. And those two numbers times 6 months is probably a good starting point.
Mm-hmm. Okay. We'll be diving in next to this relationship between business and personal that is a little more unique for entrepreneurs than it is for corporate workers. Hyacinth, how about you? How would you answer the question, how do I know how much capital I need if I'm starting up a new business or I'm growing my existing business?
So I love, I'm a fan of emergency funds, right? I love that Rob said 6 months, but cancels out everything. So 6 months, and it also depends on you. Like, let's be honest now, in today's day and age, especially with all the shifts and transitions that 2020 brought us, we have learned how to cut down some business expenses. A lot of us are working from home now, right? Are you working 20 hours a day? Are you working 14 hours a day? How are you able to manage your expenses? So the 6 months, I like a good cushion. If you're just starting out and you have this burning desire for a business idea, and you don't have 6 months of expenses, but you have maybe a sugar daddy or a husband or someone to pay your bills, right? Then I wouldn't necessarily say you need 6 months. It depends on your drive, because one of the things that I love about this day and age and the internet is you can literally connect with people all over the world. COVID reminded us of that you can connect with people all over the world. And depending on how much output you give, you can bring some input in. So it's one of those, it depends on the business type. But you want to cushion it. When money starts coming in, what I do caution is when it starts coming in, because let's say you're like, listen, I'm going to have bloodshot eyes and I'm working this thing because I've calculated the numbers and I know the margins are really, really great. When the money starts coming in, now let's save it. Let's put it to the side, because I am an advocate of an emergency fund in your business and in your personal lives. You need to have an emergency fund. So at some point, get yourself up to at least 6 months so that if things shift, you can kind of gain your footing a little bit and then decide how you want to pivot. If 2020 taught us nothing else, it taught us how to pivot. It reminded us that we can pivot. And so that's important for us to remember.
Thank you. Excellent. And how about Dan? Dan, how would you advise a business owner? How do I know how much capital I need?
I have nothing to add to that. A cash flow, the forecasting, I mean, that is all spot on. And the only thing I would add to that is the benefit that you get by going through those exercises on a regular basis, not just from projecting, but also from really seeing those expenses over and over and over again and understanding, what there's value in and what there's not value in. I did that years ago with my personal credit card. When a popular coffee chain came out with an ability to auto load your card, and I wasn't paying attention to how often I was doing it because it was just a thing. And then I started adding it up and was like, wow, I'm spending a lot of money. And I think business owners can sometimes get so caught up in the day-to-day operations and everything else that they don't pay attention and they start paying for stuff and they don't realize. And to Hyacinth's point, 2020 made people do that. But what if we were doing that on a regular basis anyway? These things happen all the time. I mean, 2008 happened, and now, we're less than 10 years since that kind of came back, and we're going through another period. So it's going to happen again. So why not be prepared for it, as prepared as we can be in advance, rather than waiting for it to hit and then being reactive to the situation. So yeah, cash flow, forecasting, projections.
Absolutely. Excellent. And isn't that one of the amazing lessons for all of us around COVID, is that, and I got it in the housing industry. I used to be a consultant to the home building industry. So when the housing industry crashed in 2007, I learned the hard way that real estate is cyclical. The markets are cyclical. It's going to be about 10 years and then something's going to happen. And, we are for me, the second wave of it's been about 10 years, and it was COVID this time. Would have been something else if it wasn't COVID, although hopefully not quite as profound as COVID. By the way, Dan, I'm going through that weekly review of my spending with Rob Bertman, my money coach, every single Friday now. And I get to face, what I'm spending money on and what could be cut. I think today I cut $2,500 from my annual spending on my business in, maybe half an hour of taking some action after a deep review. So highly recommend that if you're not already doing that kind of work. So new topic, let's talk about that intersection for small business owners between business and personal finances. And I actually want to start with Rob this time, then I'm going to come to Hyacinth, because Rob, this is something that we've been looking at with my financials. I recently hired Rob as a money coach after setting an intention to make some really big improvements in my financial house. And Rob looked at my cash flow spreadsheets on how business flows into personal. He looked at all of my spending. And, while I have, business books and personal books, Rob, the place that you're having me focus first is on business, like getting the business in order. Can you just talk a little bit about the intersection for business owners between business and personal, expenses and all of the financial matters, and like, how should we be thinking about this intersection?
Yeah, it's pretty simple answer. It's one and the same. Business expenses and personal expenses as an entrepreneur are the exact same thing. I feel like a lot of times spending in businesses get a little bit out of hand because we think it's going to help us make money when sometimes we're just spending on stuff. And the other thing is sometimes business expenses can be like monopoly money, where it's like, this money doesn't count, or like going to the casino, how they transfer your money to chips, or we talk to ourselves, I'm getting a business deduction. I'm getting a tax deduction, so it's okay. But you're still spending $1 to save 30 cents or whatever. So I would say that they are very closely aligned, especially from a cash flow standpoint. Like you hinted to before, I mean, tracking spending in both business and personal are extremely, extremely important. I would say before you can even do a forecast, if you're already in business right now, before you can even do a forecast, you need to know where your money's going. So a lot of times what people do is they start with a budget and the wheels fall off, because anytime you're changing spending, you're changing habits. You're changing habits within your business or your personal life. So the first step is tracking your spending, gaining awareness around that. Then you are empowered to make the change. But in general, $1 spent in the business is one less dollar that's coming home to you. And so you got to make it count.
That's what I'm working on in a whole new way. I love it.
And you're doing great, Erin.
Yeah,
you're doing
great.
Thank
you. All right. So Hyacinth, how about for you? Like, how do you see maybe in your own business and in your own kind of environment, or perhaps you've observed something from your father growing up in a family-owned business? How do you see the intersection between business and personal financials?
Rob I love that he's mentioned the tax write-off, because so many business owners are like, oh, it's a deduction, I get a write-off. I'm like, wait a minute. Let me put in perspective what you're really doing here. So I completely agree that the way you spend money personally is going to transfer over into your business, because you're running the business. It is your business. It's your kid. It's your baby, right? So it's almost like for those of us who have children, when we see our children behaving or acting a certain way, we can holler and scream all we want, but we know who they're modeling. And so that's the same in our business as well. I like to tell business owners, I do a tracking exercise as well, but to think about getting your personal finances in order and how you're going to spend your personal money, because when you spend your personal money a certain way, you're going to carry that over into your business. So it doesn't matter, I think, because Rob said he does business first, but basically they're the same. And you need to understand that it's your business. It's not something that's separate from you. When you start to take that ownership and that responsibility, then you can have the mindset of, okay, I really need to most importantly be aware of where I am. And I find that a lot of times people aren't aware of where they are. They're always focused on the future. So we like to bring you back into where you are. Before we can talk about the future and how you want to get there, we got to check the gas in the car first. Do you even have enough gas to go to the 7-Eleven and you're trying to drive to California? Like, what are we doing now? And that goes back to tracking expenses. That goes back to being in tune of how our money really, really works. And once you do that, it becomes so empowering because you're like, wait a minute, no, I know that that's a write-off, but I don't really need this software. You know, I don't really need this. I don't really need this type of lunch. I can pack my lunch, and then you can start shifting where you want to spend your dollars in places that are going to return more value to you on the back end.
Well said. Well said. Dan, how would you expand on this conversation?
Yeah, it's a great question. And I think that, you know, just adding to what other people have commented already, you know, looking at a lending need, banks are going to look at business and personal. They're going to look at all of it for small business owners because it essentially is the same. And for better or for worse, if your personal picture is a mess, that can cause major issues for the business and vice versa. So, you know, just to be aware of that. Sometimes it can help and it can assist in getting a need fulfilled, but essentially it is one and the same. So it's important to look at both of those things, just as, you know, look at your personal finances just as much as you would your business. The bank's going to look at your personal tax returns and look at your, you know, your assets and your liabilities just as much as they're going to look at the business. So it's good to look at that again early and frequently. And again, talk to your strategic advisors, you know, talk to your accountant, talk to your banker early and ask them what's going to be looked at and what they're looking for. So that way you can start preparing and getting the house in order before you have that lending request. Perfect.
Perfect answer. Thanks. Let's come to Elizabeth. How do you look at and think about the intersection between business and personal?
You guys are up in my grill about tax deductions. What up? But I do actually advise my clients to make sure that they are not just wasting money, but they're finding a way to spend money that is going to enhance their future. We do recommend retirement contributions because oftentimes those can be made after the year is over with next year's cash, which is helpful, and to expend on things that are going to produce income in the future. But in all seriousness, it absolutely is one and the same. And it often comes to that when we're talking about taxes, because the way that businesses are set up for small business owners makes the tax burden really fall upon the personal tax return of that business owner. And so a lot of times there's a debt that's amassed because money's not saved to cover taxes when it's time to pay them. And that's a scary place to be. It's a hard place to be. And we sometimes are helping our clients dig out from being underneath that. And I mean, if you have people that work for you, I just want to caution that payroll taxes are they're just absolutely do not pay your payroll taxes. You must pay them. And you have to figure out whatever you have to do to pay them, because it is a very risky place to be when you miss payroll taxes. Even in COVID, where there is forgiveness sort of out there, a little bit of grace out there in our taxing agencies, it's just, you just don't ever know when it's going to collapse in.
That is always a hot tip that I think we cannot hear too often or too much. All right, so let's come to Hyacinth now for our final question, and then we'll open up to some questions from our guests. Hyacinth, can you give us some tips from your perspective on business planning or perhaps financial business planning, our financial business plans for the next 5 to 10 years. How would a business owner kind of look at their business through the lens of financials, money, as they're thinking about their 5-year business plan, their 10-year business plan?
Great question. So let's start with, I think I've said 1,000 times, that I am big on cash flow and I'm big on forecasting, right? So when we look at the numbers, then that will help us make decisions for the future. So as far as business planning and as it relates to your money and financial planning for your business, firstly, let's find out how long you want to have this business. Right? So we're in a day and age where sometimes people want to scale a business and sell it. Sometimes people want to be doing this for 30 years. Sometimes they want to do it for 5 years and get out. Being a business owner gives you that luxury. Remember, you are not working on someone else's job where you have the expectation that you're going to stay there for 30 years. So when you start there, you can say, well, what is really my plan for this business? And how am I going to keep continuously scale to the point that I'm ready for my exit, whatever that may be. So when you have to do that, here again, 2020 reminded us that things change rapidly. We must be looking at what's working and what's not working for our business and for our competitors. I hope that no one on this call believes that we have no competition. We like to call that competitive mapping, not because we're so concerned with what they're doing, but we need to know what's going on in the industry so that we can say, okay, listen, we know that we need to pivot. I had a call with one of my clients who owns a trucking company, and I said, have you started thinking about autonomous trucks? Have you started thinking there? How long do you want to have this business? And then we got into the conversation of, well, I don't know if I want to be doing this for another 10 years. So when you think about planning and 5-year 10 plan, first start with how long you want to do it. Then when you decide how long you want to do it, think about how you can scale your current service and or products. If you enter the market today and you have the best product or service, let's say tomorrow you wake up and he says, I'm inventing flying shoes, and nobody invented flying shoes, and this is gonna make me a ton of money. And you make a ton of money with flying shoes because, hey, who doesn't want shoes that flies? You can bet your bottom dollar that someone else is going to be making flying shoes that are better than yours. So you have to be thinking about, okay, I made the first iteration of flying shoes. Where do I want to go with this? What am I rolling out? What's the development? And so when you think about these things, then I think you can come to the table and say, all right, what's my 5-year plan? What's my 10-year plan? Who do I need to hire? What money do I need to spend to make this happen? Or what do I need to be able to do to say, you know what, in 5 years, I'm selling this, I'm scaling it and selling it. So those types of questions will allow you to really plan instead of having that mindset of, oh, this is my business baby and it's just going to be here for 18 years. I got to raise this business baby for 18 years, plus maybe a few more if it decides to go to college. When you're an entrepreneur, you don't have to do that.
Excellent response. How about Dan? Dan, how would what advice would you give us around this financial business planning through a financial lens for a 5-year plan, a 10-year plan?
I don't think it's fair to have to go after Hyacinth because
you need an analogy. You need a good analogy, Dan.
I love these pictures. I think the biggest thing is just being realistic, really understanding what you're capable of, and then and Hyacinth said it over and over again, going back to that cash flow and the forecasting and the projections to understand what's possible. I think back to like my early 20s, and I always had this idea that if I just had like $5,000 or if I just had $10,000, I could pay off these things and I could do these things and I'd be all set, right? And I think sometimes in business, it feels that way. Like if I just had $500,000, I could create this new, stream of revenue. I can pay off this, I can hire 10 people and it makes it all happen, but it doesn't typically work that way. That's not realistic. So I think, understanding truly what your goals and your dreams are. And I think typically dreams can be different than goals. Understanding what those are, and then understanding what's really possible and what you can achieve with the cash and capital you have. Going back to the earlier conversation, what taking on debt will help you achieve. And then leaning on your advisors. Again, you as a business owner can't have everything, and small business owners, or you can't have access to all of the information out there. And as a small business owner, you don't have all those C-suite executives to support you. So lean on your business coach and your accountant and your banker and your attorney and your insurance agent to glean as much information as you can from them about your industry, and about the economy and whatever other information is out there, so you can understand what the risks are, because those advisors are already, from a banking standpoint, we're looking at what the risks are in different markets, in different industries, to know, where there's opportunity for lending and maybe where there's a higher risk that we should be aware of. So, talk to your advisors and find out what they're looking at. And that can maybe help you guide what the future looks like for your industry and for your business, and kind of map that plan out, and then be prepared to be flexible and make adjustments as things change.
Perfect. Yeah, Dan, I think our recent conversation about the trend with hourly rates for business coaches, distinct from the trend on the hourly rate for executive coaches, really underlines that. You and I were in a conversation because, again, you're my banker, and you said, hey, what's your rate like? I just been doing some research on hourly rates in the coaching space, and here's what I'm finding. And that was a really valuable piece of information and a great example of having your advisors around you to help keep an eye on and kind of keep a finger on the pulse of the external market. Because as business owners, we have to be looking at things through the lens of internally, ourselves and our businesses and our companies and our clients, but also externally, the pressure from the market, the trends in the market, the government, technology, all these external factors that impact our business. So thanks for being one of those external partners.
Yeah, and the information is out there. I heard a small business owner one time say, I need to do some market research. And I said, are you in the market research industry? And they said, no. I said, then you don't need to do the market research. It's already out there. Ask people. Bankers have it. Accountants have it. Business coaches have it. So ask them for that information. Don't spend your time doing it yourself. It's already there.
Well said. All right, Elizabeth, how do you think about this kind of financial business planning or business planning for 5 years, for 10 years through a financial lens?
I am just intrigued by the answers of our panel. Everybody is clearly in a different space in terms of what they hear and where they are. I happen to be in a space with these crazy, radical serial entrepreneurs. These are people, money happens with the ideas that they're doing and the things that they're doing, and they come to see me because they have tax problems, or maybe generally, that's what the issue is. So what I see from that standpoint is they are trying to figure out financially how to create something in their future that they know that they want. From a business standpoint, from a personal standpoint, we already said these things kind of go together. So the idea of using forecasting and coming out with a 5 or 10-year plan or an exit strategy, I don't see a lot of that. I see just growth, like people moving from one particular part of their business and then expanding what it is they're doing, and maybe creating wealth through investment in real estate as a side part with what they do, or a real passion for farming, or something like that. I mean, really odd things that are very, very personal. And plus, they're also a reflection of their family and their family's values. Like Hyacinth is in a family business that has grown. And in a sense, my dad was an attorney, so I kind of saw what this was like ahead of this. I certainly was around a lot of people who were professionals, and it's a real different kind of a family business. But again, I would say I'm someone in a family business. A lot of people land in that sort of a space. And when that happens, you have connections and things that influence what you're doing over 5 or 10 years. And for me, while it might seem like I'm rambling a little bit, people and our networks and all the people that are around us speak in to what our plans are and what we're trying to do over the next 5 or 10 years. And like raising a kid to 18 years old, you're in it, you're doing it, but then all of a sudden things change. Hopefully they grow up, they go and do the next thing, but you're still a parent, you're still living in your love for this person and all, and there's a new role that you get to play. And I don't want to not mention that Erin is an incredible resource. If you are a person who wants to create a 5 or 10-year plan, she will guide you with those questions and help you. And those questions can help drive your financials. what your desires are become what you pursue.
And we are seeing that happen at your company at Farmer and Associates, just around a family-owned business with your son in the business, and your 5 and 10-year vision is exactly what you are executing and building right now. So well done. We just had a session today, which is why this is also kind of fresh on my mind. And Elizabeth and her company are making amazing progress. So Rob, how about you? How do you think about this idea of creating a 5-year plan, a 10-year plan through a bit of a financial business lens?
I think it's really challenging, if I'm just being honest. I mean, who knows what on earth is going to happen in 5 years or 10 years? And it's really hard to plan ahead that far. So the way that I think about 5 and 10-year planning is, what do I want to be within this business? Because Hyacinth brought up probably the number one point in business. There's going to be competition that's going to come in there. And you're going to have to shift and pivot and do all this stuff. I would think if you're going to create a 5 or 10-year plan, you have to think of it as like an experiment. Right? You're going to try some things, they're not going to work. You're going to try some things that will work better than others. And you're going to have to be comfortable pivoting. Like, for example, my original business 5 years ago was built around creating an online course for people to do their own financial planning. And I was like, this is it. I'm going to have more impact. I'm going to help more people. Like, this is going to be great. I'm going to provide an even better living for my family and all this stuff. And you know what happened? It was a total flop. I spent 9 months building it and I sold zero of these courses.
I've been there. That was a laughter of recognition that I relate to.
Yeah, we've all been there. I mean, anyone who's been in this, whenever you hear stories about entrepreneurs building their business, they always talk about, so the first 2 years, things didn't go so well. But then you got to really like hold on to the first 2 years, because when you're in it, it's challenging. Like really, really challenging, because you start questioning yourself. So I would say the 5 or 10-year plan should be based around what you want to get out of the business and what you want the business to do for your people. And then start with a very, very focused approach of what you think they need and what they want right now. And then the business will build around the feedback that you get. So for example, I started with just budget consults. After the flop, I started with its budget consults. And then people said, okay, well, budget's great, but now I need to know what to do with the money now that I have it freed up. Okay, well, let me add on this little, wealth builder roadmap on top of it. And now people are saying, oh, this is great. Maybe I want to bring my kids, help my kids with finance. So the product development that I'm thinking about within my company is coming as a direct result of the demand of the people that I'm trying to help. So if you keep that level of service to your clients in the forefront and continue to do your research and development and listen to their words and their issues and solve those problems for them, then that's kind of the way that's definitely the way I think about it. The other thing is, when setting business plans, the metrics and targets are great, but it's all about the activities that are going to help you get to those goals. So this is a big failure of mine too. I just said, I'm going to make X amount of dollars, or I'm going to help X amount of clients. And it never fit. It never worked until I said, I'm going to commit to these activities daily. I'm going to commit to reaching out to these kinds of people, or this amount of people every day, all this stuff. And once I started focusing on the activities, that's when the business started to take off. So make it activity-based business plan, focus with the customer and the lifestyle that you want out of the business and that you want to provide with your people. And and if it's vague in 10 years, fine, you'll hit it because you're thinking about your vision for the future.
Very nice. Excellent. Okay. Let's open up to some questions from our live guests. I know some folks will be listening back down the road, but we have several people with us here live, and we would be really happy to answer your question. It looks like Jeanette has a question, and you can, Jeanette, direct to a specific panelist or the panels in general.
Oh, anyone who would like to answer is fine. I just want to start off by thanking you guys. Everyone has given such a wealth of information. I've taken so many notes, and I have a list of to-dos as soon as I get off this call. My question is a bit more specific. I'm very early in my business ownership. I launched my business in October, at the beginning of October, and I'm challenged with I'm at the stage where I want to reinvest, or I feel like I need to reinvest any revenue that comes in, any profit. I don't know that I've created a strategic plan to figure out how to pivot to actually carving out a profit. If Christmas was really good. I have like an online gift shop. And during the holidays, I exceeded any targets that I had, but I just felt like, okay, I'm early in my business. I need to reinvest everything. So my question is, what advice do you have to kind of figure out, okay, now you can start paying yourself? Because I just don't know that I have a plan for that.
All right, that's a great question, and one that I'm sure other members of the Women's Creative has. Let's come to Rob first, and then perhaps, I don't know who would feel like they want to answer that next, maybe Elizabeth. So Rob, how would you answer that question? Brand new business, just getting started. How do you know when you can afford to take a little money home versus just leaving everything in the business for reinvest?
Yeah, first of all, congratulations on getting started. I mean, that you took a huge step and it's been successful, because if you're asking the question, when do I pay myself? That means you're having some growth, so that's awesome. I would say that you always need to be reinvesting in your business. And you also always need to be bringing money home. So the question is, you could kind of take a look at your past. How much expense have you had to spend in order to generate the revenue that you generated? And that's kind of like your profit margin on that portion of the business. Now, if you wanted to, I mean, we could just use a simple metric and say half of that, I'm going to invest half of my profit back into the business. I'm going to take the other half home. So the most important thing is that you have to like figure out what that number is, and then you can set whatever profit margin you feel like is right for you. But I think it is important to take the money home, because if you don't think about that, then you can kind of forget why you're doing it in the first place. And it's like sacrifice. And then just one other thing is, when you're reinvesting, the more confidence you have that the reinvestment is going to result in more sales, the better. So if you're like trying to figure out what's the next move for me, sprinkle a little bit of money into different ideas to grow. And then one of them will work, maybe many of them will work. Then you focus all that energy on the stuff that wasn't working onto the thing that works. And that's where you do your reinvestment. But it is an experiment. So it's just going to take some trial and error. But I don't have like a hard target for you. But yeah, just go ahead and take a look at like how much expense you've had in order to generate the sales you generated.
Perfect. And you'll see Hyacinth's book recommendation, Profit First. It's a really common, maybe well-known, highly recommended book around profit first. It's by Mark. I don't know how to pronounce his last name, but any kind of Google search will produce that book. So we can either come to Elizabeth for a second answer on that question, or if Jessica or Betsy or any of our other guests have a question, now's your opportunity. We just have time for one last question. Betsy's coming on in. Come on in, Betsy.
So when you go to look at your expenses, I mean, not for the first time, obviously, but are there really specific tools or resources that you would recommend when you're examining your expenses, tracking them? I know there's a ton of different apps, and I'm just one of those people who gets really overwhelmed by the amount of choice. So if there is specific recommendations, that would be great. And like a checklist of, first you sign up to do this, and then you look at how much you're spending on X, Y, and Z, and then you try to reduce by whatever percentage. Like if you tell me exactly what to do, I will do it. But if you tell me 50 different things, I
actually was in tears yesterday saying to Rob, just tell me what to do. Because if I could see it on my own, I wouldn't need you. I don't know what to do. So tell me what to do. And I'll tell you just a little bit about the tools that I'm using, Betsy. So we export all of my spending from QuickBooks into a Google spreadsheet.
Okay.
And I'm just reviewing line items on the Google spreadsheet. I'm creating some categories so that I have a sense of what's a fixed expense versus flexible expense versus investment in the business. I've, created these categories with Rob. And then I'm from there looking at, per Rob's instructions, what do I need to keep because it's critical to the business? What do I need to or want to cut back on, or I could cut back on? Maybe then instead of going to, happy hour on the patio with clients 5 times in the month, I could do it 4 times. And instead of getting 3 Prosecco's, I could have 2 Prosecco's.
Like that's
so
keep.
Right. So those, yeah, well, that stays in keep, but it's in cut back. And then what should just be eliminated? And that's the exercise that my team and I have been on. And from my session with Rob yesterday, we jumped into action this morning and canceled some appointments so we could just jump into that right now and start saving money right now. So that would be my answer. For other panelists, anyone have anything you want to add to Betsy's question? Elizabeth?
Well, this may seem simplistic, but I always advise my clients to open a business bank account, not let everything be lumped in with their personal, because it provides a way for you to see what is happening in your business in one place instead of having to look in several different places, if you can all manage that. And when Erin talks about QuickBooks and sending it out to a Google Doc, QuickBooks will read your banking information and if it's set up properly. And that way you have a place where you can categorize your things. Now, Erin obviously likes to look in a Google Doc to be able to see what's happening with her. I'm very, very comfortable in QuickBooks, so I just know how to open and click around in there, and we teach our clients how to do that. But in any case, my advice is you need to simplify your business life by having your business finances in one container and your personal in another.
Excellent. Great point of clarification. Hyacinth has something to add, and then we're going to be wrapping up our conversation tonight.
Yes, just really quickly. I love all the recommendations. I really love the Google whole suite thing because I think it's so simple and palm of your hands. Before you do that, I love to take it old school and tell my people, get a pen and paper, and every time you spend a penny, write it down. Get you a 99-cent notebook from the dollar store or wherever. Whatever, don't put it in your phone. Take out a piece of paper and a pen. It can be a napkin, and write it down. And I guarantee you by day 3, you're going to be like, wait a minute, I'm at Starbucks again? No, we have to do something about this. So when you track your expenses like that, the old fashioned way, I would say for 7 to 14 days, then that's going to give you like the empowerment and the momentum to be like, okay, now let me sit down and look at these statements because I have to do something about this because I know that I was tired of writing things down. So start there, and then you can grow to, I love, again, Google, QuickBooks, what your banking app may have something that you can export your bank statement into a Google Sheet. But just exercising that muscle. If you're just getting back in the gym, stick your pinky toe in with the little 3-pound weight, and that's paper and pencil.
Excellent. And that exercise is designed to massively increase your self-awareness around your behaviors. And there is academic research that shows that once we start tracking our behaviors, that we can impact our behaviors just with the tracking. That's well vetted in the academic research. So with that, I'm going to turn it over to Lindsay in just a moment, but I want to say thank you to Dan Idevito, Hyacinth Henderson, Rob Bertman, Elizabeth Farmer, our 4 awesome money panelists. Thank you so much. Lindsay, back to you.
Well, and thank you, Erin, for bringing this group together. And I have so many more questions. And if you all have more questions, you can join us for the happy hour on Tuesday, where if not all, a few of our panelists are going to join us there. So we can really dig into questions, talk more, connect over cocktails. So that's going to be, that's a happy hour for the collective members. And we're doing these, as a reminder, we're doing these events once a month where it's a virtual panel followed by a happy hour just a few days later, where we're digging into individual topics and really focusing on helping develop our creative women in the community. So thank you all for being here and for joining us tonight. It's really an honor to just connect with all of you this evening.
Thank you so much for having us.
Thank you all. And we'll be sharing this recording in the resource library and the group. And we can't wait to see you on Tuesday.
Excellent.
Thank you.
Bye, everybody. Thank you so much.
Thank you.